Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. For today's video, I wanted to look at the big picture trend of Bitcoin and Ethereum because I believe that we're going to be seeing a big impulse coming very soon. This is a point in the cycle where so many people are negative in the comments talking about why the bear market's in, why all of the people that are bullish are stupid, and I think it's very funny that this is taking place after we've had such a big correction and we're coming close into support. This is what you're going to see every single time a major sell-off happens in the market. Everybody rushes to the exit, and all of the people rushing to the exit are always proven wrong right before we go into the next major impulse. I have a bunch of charts to share with you guys today. They're going to explain where I think the prices are headed, why I believe a massive move is coming, and how we can go about making the most profit possible when this takes place. If you're new and just finding this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel. Make sure you guys hit the notification bell so you don't miss out on any of these amazing updates. If you guys want to join the Discord server, follow all the trades that I take, or you guys would like to download my free beginner's guide to crypto ebook, links are going to be provided for you in the description for all of that. Check it out. It's free. And with that being said, guys, let's jump right into this amazing video today. Alrighty guys, so to start off this video, I want to talk about Bitcoin. I wanted to break it into the shorter term cycles, and then I also wanted to get into a couple other talking points. Now to start off with Bitcoin, what we're going to be taking a look at is the $40,000 level. I'm going to be explaining to you guys a basic trick that I've learned when it comes to investing, analyzing support and resistance levels, how to go about analyzing support and resistance levels and comparing them on two separate charts. And if that makes no sense, I'll get into it right now. So basically, the first thing that we're going to be talking about is the $40,000 level for Bitcoin. Technically, it's just sub $40,000, but this is a level that we were talking about because it's acted as both resistance as well as support throughout the entirety of this consolidation. Now, the thing that I do want you guys to understand, I talked about the potential that I want to see Bitcoin hold above this level, and I want to see us get continuation. I said that if we go below this level, that's going to show some short-term weakness, but it's not going to be the ultimate, deciding factor that this is going to be the new bear market. I did talk about that, but the more that I analyze this entire consolidation, the more that I just, once again, share with you guys that it looks like a triangle correction of some kind. I mean, obviously, we topped up here. We had a 60% pullback. We rallied back up, technically made a new all-time high, but once again stuffed at resistance. And then we sold off all the way back down, and we're still not even quite done with this correction yet. We might chop around here and do something like this. We could technically pierce below this for a short period of time. It doesn't really matter that much because in a triangle, you're going to see it do this. Bump, 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 like that. It's not meant for you guys to try and swing trade the whole way up and down. It's meant to kind of chop you out. It's meant to shake out the weak hands. Every single time the market's pumping, people are buying. The market tops, the market crashes, people are selling. And then once again, smart money buys, and then everybody gets excited. They buy the top again. People take some profits. And so it's literally just a lot of retail investors that are panic selling as it's dipping. They're getting too shaken out. Then as it rallies, they're getting more leverage. They're getting excited again. Then as it sells back off again, they're getting back out, explaining that they think the bear market's in. And so it's literally just going to be one of the most choppy times inside of any sort of cycle. It's a triangle correction. And so that's kind of the way that I've been looking at this. And one of the things that I do want you guys to understand with triangles is the fact that triangles can literally retrace almost 100% of the move. So keep in mind that we have the support floor here to like 29,000. This is our support floor. This triangle could easily come all the way back down here and barely miss this support, and it easily could come all the way back down and tag support. That is something possible. With a triangle, usually you'd want to see it kind of hold somewhat of a support, but it is a triangle, and so that's the point I'm trying to make with you guys here. It's going to be volatile. There is a reason why these things shake you out. And so when I look at this chart, I think the best strategy for me is simply, well, once again, holding. I mean, I'm going to be holding. You guys already know I'm expecting one more final rally. If I'm wrong, I'm wrong. If I'm right, obviously we make more money. At the end of the day, it's always my own personal plan and what I think is best for me. And I just don't think that we've seen the cycle top yet. And I've once again stuck with that. I've been very adamant about saying that throughout this entire correction. And I'm still going to continue to hold through that until 29,000 becomes resistance. I just think that this is going to be one big consolidation pattern that leads to one more bigger move on the upside. Now, the point that I was trying to make here with this $40,000 level is really just trying to make and understand where the exact low is. Are we going to bottom right here at 40,000? What if we went below that? Is that going to be the the signal of the new bear market? How do we plan ahead for that? And that's why I want to talk to you guys about the total market cap, because this, in my opinion, is where we're going to be able to find a lot clearer support and resistance levels. When it comes for me to analyze the support and resistance level, I like to go to the crypto total market cap because it seems to follow and respect support and resistance levels a little bit better than Bitcoin and Ethereum does. Now, if we look over here, guys, notice how on Bitcoin, this green line, we already tagged it, right? We tagged this support. Notice how many times we've reacted to this level, a million different times, right? This level has been our important level of demand. Now, if we come over here, notice how the current price structure, it didn't tag that same level with the total market cap. We actually bounced above it. We didn't even come all the way back down to retag this low of the sell-off, right? In this little correction where we originally flipped this green level, we didn't even come all the way back down to retest the low of that wick. So we're kind of missing the full retest of this level because this level lines up a little bit different with the total market cap. The total market cap shows this level is just about 10, 15% lower. Whereas on Bitcoin, it's already tagged that level, right? So this is one of the things I have noticed. The total market cap might show that you need one more leg lower, but Bitcoin might already be sitting on support. And so this is something I've actually seen play out a number of times watching Bitcoin's price, where Bitcoin looks good, Bitcoin looks like it's sitting on support. The total market cap, it's kind of in a little bit more of no man's land. You might buy Bitcoin assuming that it's just going to bounce because it's on support. Bitcoin drops, we go for one more leg lower, and then that's ultimately where we see the total market cap bounce off support, and that signals our low. So this is something I am watching for, and I want you guys to be aware of this in case we do get that extra leg lower to retest this level. It's not going to shake out too many people, and if that happens, we would expect that this green level would actually we would get a pierce below that, probably drop closer down to about 35.5. Maybe 36,000, somewhere right around that range. And once again, guys, it's just going to be kind of a capitulation event if we get below that. It'd be like this. I think it would end up playing something along the lines of this, where this doesn't really mean a lot. Yeah, we technically went below that support level, but when we look on the bigger time frames, like this level here, that when we dropped to 29,000, this would have looked like a breakdown. But on the bigger time frames, this all just turns into big wicking, right? And this would actually be the same sort of thing. We could have this spill where we drop below this level, shake out all the weak hands, everybody's ready to drop and sell support thinking that we're going to just go to sub 20,000. And I think that that's where we're going to get our ultimate shakeout. Because once again, guys, this is a triangle. And one of the triangles that I want to talk to you guys about is actually analyzing Ethereum, because Ethereum is really the only one that's done this. Really in the way that I'm trying to explain it. Ethereum is about the best example that we can give when we talk about this exact thing. So this is what is known as an ascending triangle. I've talked to you guys about a lot about this because I think it's really important with Ethereum today. With an ascending triangle, you have an ascending support level, and then you have a horizontal resistance, right? Now, this is the way it goes. You make the top of the resistance, you sell down, find support, you rally back up pretty close to the top of that resistance. It can stop just prematurely. It can pierce slightly above, but as a rule of thumb, you want it to be pretty close to the topping point of the previous high. Once again, we get another sell-off, higher highs, higher lows. We're still maintaining the uptrend. Then we kind of go through this period of consolidation, and then that's what actually took us for our final rally in that cycle. This is very, very similar to what we see today with Bitcoin, and if we actually drop it to a log scale, let's remove the drawing tools, and I'll share with you guys how this cycle actually lined up with Fibonacci before we compare it to Bitcoin. So we're going to be measuring the size of wave 3, right? And before you guys roast me for saying, oh, you're not using the right fibs because this is a log scale. I am using the right fibs. I don't want to actually change the fib settings to log scale because it pretty much just makes Fibonacci useless. So if you guys notice here, we get our cycle top up here. Where do we find support? Well, at the 618. This is a level that I've told you guys we oftentimes find support. It's a level for buying the dip and continuation of bull trends. Once again, that's pretty much where we bottomed. We did have this little wick below, but it's not going to be 100% exact. The 618 was our support low, and then we rally back up once again. Now, this is important because we got our 618. The first sell-off drops and bottoms at the 618. Now, the second rally up to the all-time highs, and then that next sell-off, this one usually goes a little bit lower. For Ethereum, it went pretty close to the 786. We just about went perfectly to that 786 region. Depending on where you're looking at this chart, if you were looking at it on Coinbase, it did hit 786. And then that's what took us to that final run in the cycle. So we get a bounce right here at the 618, and then we get a bounce right here at the 786. And that is our triangle. That ultimately, that's what leads us to the blow off top. Now, what I thought was interesting was if we take this same rule of thumb and we compare it with Bitcoin in this consolidation that we're in today, you guys are actually going to see that it's very much the same. We're going to be drawing wave 3. We're going to be analyzing what that looks like. We get our support low, and it pretty much bottomed to the 618. This one is a little bit different, but as you guys can tell, we were pretty much right there at bottoming at that 618 level. Didn't perfectly hit off of it, but once again, guys, in the same way that Ethereum technically went slightly below that 618, we're just slightly above it. So it's a level that we watch. It's a zone. It's not going to be 100% exact. You can't just draw a line and say, yep, this is the spot. Going to hit it every time. It's not always going to do that. We're meant to trade these as ranges. And we can see that once again, the 618 acted as support. What happened shortly after? We find our support low, and then we rally back to the all-time highs. The same thing happened in 2017 for ETH. Now the big question is, during this second sell-off, are we going to hit the 786? Is this a potential that we could watch for? If we draw it to the upper resistance, as it stands right now, this 618 is actually becoming a resistance. And so if this is going to play out like Ethereum did, the 786 is going to be taking us back down here, which is going to be approximately 37,500. And I wouldn't even be surprised if we went slightly below that level and had a wick below that. These are something that I want you guys to understand because this is a triangle consolidation. This can drop. It could even go all the way out to the 88.3, and it's still going to be a confirmed triangle as long as support holds. It's a really choppy consolidation pattern. It's a consolidation pattern that resolves whatever the length of trend already was. So in this case, we've already been uptrending. On average, a triangle consolidation will just break to the upside of which it was already following. In this case, upside, because that's where we were going. And so I do believe that we will break out of this bullish, and we have a pretty clear example of what that looked like in a prior cycle. And we can use Elliott waves to actually factor this in as well. So if we look at Elliott wave structure, ETH looks a lot like Bitcoin today, or I should say Bitcoin today looks a lot like 2017 ETH. We saw wave 1, we saw wave 3, this was wave 4, and then that took us to wave 5, right? It was that wave 4 correction that created the triangle formation. I told you guys this a lot. Inside of a wave 4 Elliott wave correction, oftentimes triangles are going to be created. It's not always, but if you see a triangle inside of a market, it's generally going to be taking place inside of a wave 4 structure. Now, this is interesting to me because if we look at Bitcoin today, we drop it to a bigger time frame, you guys are actually going to see pretty much the same thing here. We've finished wave 1, right? We already know that we've got wave 1. This most recent impulse up here was wave 3. Wave 4 is the triangle consolidation. And once again, what is it that takes us into that final move? Well, it's wave 5. We have to see wave 5 before the cycle is done, in my opinion. There are people that believe that this is the wave 5. We barely broke all-time highs, and that was wave 5. And so they're drawing it like this. I disagree. I believe wave 5 is going to go into another parabolic rally like we've seen. We don't have clear impulsive structure like we saw here, like we saw here, like we saw here, and every other cycle. And so these are all just more reasons on why I still think that this is going to be breaking bullish, even if we drop to the 786. I just want you guys to be aware of that because this is something that plays out in the same Elliott wave structure that we're seeing. We're following the same Fibonacci relationship that we followed in Ethereum's 2017 cycle. We know that we haven't had our final 5 wave in the cycle. If this doesn't create a 5 wave, it would be the first time Bitcoin has ever done that. I think that that's probably not going to be likely. I mean, you're kind of fighting the trend with that. My personal belief and philosophy, but this is kind of the point that I'm trying to make here, guys. I still think that there's way more reason to be bullish than there is bearish. I'm still holding. I'm okay with holding past the 4-year cycle timeframes, even though they've been invalidated as far as taking profits at the end of the year, because we still are just missing such a key factor of every single Bitcoin cycle, the final rally of the cycle. Whether we analyze Elliott waves, whether we analyze Fibonacci, whether we look at things a million different ways, in my opinion, a lot of what it's telling us in the charts is just saying that, hey, hold on, we need one more impulse, use that final impulse to sell into. And so that's kind of, once again, my plan. I feel like I'm beating the dead horse with this one. If you guys have noticed why I haven't been uploading as much, I mean, what do I talk about? Like, I've been saying the same thing. When it comes to me being a bigger time frame analyst, I can only talk about so many different things, especially inside of a big picture consolidation. There's only so many different scenarios to watch for. And so when I tell you guys that, why would I just keep coming up here and explaining the same thing? And so I do want you guys to stay informed and updated. I know a lot of people are getting fearful, especially whenever you see red candles after a bounce, people start freaking out. So I did want to talk about this just to summarize some of that thought, maybe solve some of that emotional strain that you guys are having a little bit. But if you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you guys don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are going to be in the description for that. You guys can also join my Discord server for my. You guys can also sign up for my Discord server with my NFT project. If you guys want to join that, if you guys want to get access, links are going to be in the description for all of that. All of the fun stuff that you guys want to look out for in my groups, all of it, links in the description. Thank you guys so much for watching. And with that being said, I will catch you in the next one. As always, peace out.